Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look across markets. We're going to be taking a quick look at what's coming up this week and how things could play out, basically. So let's jump straight into the video. I want to start with cable, or the exchange rate between the British pound and the US dollar, because we've had a development in the UK. Today, on Monday, we've had the new UK Finance Minister, Jeremy Hunt, who recently replaced the last guy, Kwasi Kwarteng. I think that's how you say his name. And he's announced basically a massive U-turn on that. You remember a couple of weeks ago, we had this new sort of mini budget announcement that triggered this basically collapse to new record lows in the pound versus the US dollar. Then, there was some backpedaling and some support from the Bank of England to prop up UK bond markets, which were in a bit of a panicky state. And we had this recovery. Then we had some more downside last week. I mean, it's been a roller coaster, really, for sterling. But once again, we are back on the front foot in the last couple of days, and certainly this morning, cable around 113 or just below 113.50, just probing some resistance here in the form of this recent downtrend and some highs from the end of last week. The new UK Finance Minister, or Chancellor of the Exchequer, as we call them in the UK, has pretty much rode back on all of the unfunded tax cuts. Now, it was the fact that the previous finance minister wanted to do these big tax cuts that were going to be funded by borrowing. That had been the thing that had got markets so concerned. So, yeah, pretty much it's, markets are giving this new finance minister and his new ideas the thumbs up for now. But as you can see, technically speaking, things are still not looking great. Let's just get rid of these arrows. Cable still in a downtrend, still being capped by these recent highs. And, potentially, if the dollar continues to weaken, which it has been today, mostly across the board, we could be in for a little break higher towards 115, which is, support turned resistance area, which I quite like. And then there's the 50-day moving average there as well. That would be a tough area to get through, given the backdrop, which still, you got to think, favors dollar strength in the sort of medium term. Because remember, last Friday we had the US inflation data, which was again hotter than expected. You've got Fed speakers that are still sounding very, 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 very hawkish. Big interest rate hikes to come from the Fed still. So, in the absence of that Fed pivot, it's difficult to see this trend of the stronger dollar turning anytime soon. That being said, risk appetite could change. So actually, let me just jump straight to the S&P 500, which is up about 2.5% this morning. We've had basically the start of earnings season, and we've had the likes of Bank of America reporting already this week. Good numbers from them, which seems to be supporting sentiment. Obviously, stocks are also getting a bit of support from this announcement out of the UK, which was rattling global markets, actually, because the UK bond market is still it's not massive, anywhere near as massive as the US bond market, but it's still an important component of that global bond market. So we're seeing yields falling in the US, sort of in sympathy with what's going on in the in Europe. And that's sort of giving a bit of a hand as well. We were so oversold recently when we tested 3,500 in the S&P 500 that, if we continue to get good earnings this week, there is potentially the scope for a break above this 21-day moving average, which we haven't really been able to get above since August. And potentially, we could be talking about 3,800 again, testing these recent highs, maybe even a little bit higher. Maybe this support resistance, support turns of resistance area around 3,900, 50-day moving average. If earnings are good, you could see potentially a bit of a relief rally after being very oversold. Just for reference, we got Goldman Sachs coming up on Tuesday. Then we've got Tesla, Netflix, and Johnson & Johnson all reporting this week as well. So all big names that market's going to be watching and could affect the S&P 500 on the whole. But we're going to have to see how that goes. I wouldn't be betting on a sustained turnaround in the US stock market right now, given what I was already explaining about why I expect the dollar strength to continue, like the likes of the Fed continuing to be hawkish because inflation still remains way too hot. And also stocks are also focused on weakening in the global economy. So any data that sort of alludes to that it's tough to gauge, isn't it? Because if weak economic data leads markets to expect a less hawkish Fed, then that could be a positive. But if weak economic data provokes fears about growth and earnings growth, which is what stocks care about, but doesn't change expectations about Fed hawkishness because inflation's still so hot and Fed policymakers are still sounding so hawkish, then that could be negative for stocks. So it's tough to know if bad news is bad news or bad news is good news at the moment, and vice versa, really. But sticking with the charts before we just quickly look at the calendar, you can have a quick look at oil. Continues to sort of ease back from when it climbed into the mid 90s last week. Still very much focused on the macro story, and the macro story is one of global weakening. So you got to think. I know I've been saying this for a very long time. Despite OPEC's best efforts, which was a decent effort, they lifted oil from under 80 back into the 90s, and it's now in the mid 80s again. But despite their best efforts, I don't think this downtrend is going to be ending anytime soon. Let's look at the calendar then. We're going to whisk through it. Quite a quiet week in the US in terms of data, like Empire State Manufacturing Index. That's very forward-looking. That was for October, a bit weaker than expected. Then we're going to have this Philly Fed one later in the week, which is also for October. So another sort of insight into how US growth is performing. Otherwise, that's pretty much it from the US side of things. We've got plenty of Fed speak this week. Like I've been saying in this video already, they're probably just going to be very, very hawkish. So that's what markets will be expecting. Other G10 countries, there's some important data coming out. So for the currency traders who like the Aussie and the Loonie and the pound potentially as well, should be interesting. Like, what have we got? Bank of Canada Business Outlook Survey. This is, the contents of this survey is very important for the Bank of Canada's decision making. So everybody watches that, and if depending on how optimistic businesses are and how worried about inflation they are and all this kind of stuff, that can sort of push the BOC to be more or less hawkish. So it can affect CAD. Then you got Aussie monetary policy meeting minutes, UK CPI on Wednesday, then followed by Canadian CPI on Wednesday. Then you got Aussie jobs that's during the Thursday Asia Pacific session. Then UK retail sales on Friday and Canadian retail sales on Friday. You also got Chinese data as well, GDP and retail sales, but I believe that has been postponed because this week's an important one for China. They're having this Communist Party Congress thing where President Xi Jinping is going to get a third term, which I believe is unprecedented in Chinese since the communists took over like 80 years ago or whatever. So yeah, big week for China as well, but we might not be getting that data just yet. That might be next week. But anyway, guys, I hope you enjoyed the video. I hope it was informative, and I'll see you all in the next one.